It's not the best option by hundreds of thousands of dollars.
That gives inspiration for anybody that's listening.
Public company D&O insurance market skyrocketed.
What's the range that people need or look for, or should they be looking for?
We don't have a shortage of prospects. They're everywhere.
So one of the things that I always like to ask CEOs, is really the where they get the name from. I mean, I'm always most curious about that. Obviously, if it was Farris D&O, I wouldn't be asking the question. But Assurtrak, how'd you come up with that?
Thank you for asking that question. Assurtrak came from 10 plus years ago, sitting on GoDaddy.com, trying to find a domain name that wasn't taken. And the company I worked for before, we had a really long company name and a really long domain name. So every time I had to give out my email, it was driving me nuts because you have to spell out, 27 characters. So I wanted something short. I wanted something, I'll say Google-esque, meaning not my name. And maybe that's because I was sensitive about the fact that I was starting a company and it was just going to be me. And I wanted to look bigger than we were. Looking back now, I see that doesn't really matter. But Assurtrak, assurance just means insurance. And then track, T-R-A-K, is training, resources, and knowledge. And as you and I have discussed in the past, I haven't done the best job of making that known, but that's where the name came from. And anyway, yeah, that's it.
No, I like it. Listen, it's a lot better than seeing a bottle of seltzer on the table and calling your company Vintage Filings. That's for sure.
I don't know if I agree with that,
but I totally relate to that. And that's something that's important, I guess, for more of the entrepreneurs and startups that are listening. When I first opened up my legal practice as a securities lawyer out of my basement, the name that I went with I went with Seth Farbman PC, but I wanted it to be Seth Farbman and Associates to just give that appearance as if I had associates. I mean, my computer was an associate and my laptop was an associate, and at the end of the day, I think it's a matter of the product and the relationships rather than the name. I think you agree on that.
Yeah.
Tell us, okay, so let's backtrack. So tell us what it is that Assurtrak does in the D&O space.
So what does Assurtrak do in the D&O space? At the most basic definition, we are a retail insurance broker. What that means is we're the end of the line in the insurance distribution chain that is interfacing directly with the client. And so in this case, CEOs, CFOs, COOs of public companies that are trying to obtain the best price and the best product for directors and officers liability insurance.
And as somebody who has a front seat to working with, countless IPOs and publicly traded companies, and I guess for the most part, we'll focus today's conversation on the public side versus, the private and the professional liability side, which you do as well, small law firms out there, small accounting firms. But for the interest of our audience, what are some of the I think, challenges that you might see a unique perspective on that directors and officers of publicly traded companies are facing today?
Well, I think I'd like to back that up to a little bit broader question.
Okay.
What are the challenges that a commercial insurance buyer sees? Because it really applies across everybody, and it's truly why we get out of bed as a team every morning, is that finding practical, actionable advice to buy commercial insurance is hard to do. And the problem, I'll call it, that we are trying to solve every day is so many people get through buying their insurance and they don't really know what they bought and why they bought it. They just know that they needed to buy insurance. And we really, really believe there's a better way to do it. And something that we always try to, highlight is that it doesn't mean it has to be hard. It doesn't mean it needs to be complicated. It doesn't mean that you need to quit your job as running your business and focus on insurance for a week. It just means you need to look at it a little bit differently. So then moving forward and talking about, public companies in particular, anybody that's been in this market and when I say this market, I mean the insurance market, for the last 5 or 6 years, knows that the public company D&O insurance market skyrocketed. It was a historic hard market where most companies were seeing 20, 30, 40% rate increases for 3 or 4 renewal cycles in a row. Many people were paying 2, 3, 4, 5x what they had paid pre-hard market, and call it 2018. So it caught everybody's attention, right? When something's that expensive, it definitely gets attention. But when it gets that expensive and it's got your attention, the first problem I talked about still exists, meaning you don't have an outlet to go get practical, actionable advice on buying your insurance. It's now just a bigger problem for you. So when we're talking about public company D&O, one reason that we went all in on this several years ago was partly it was just being fortunate and meeting people like you that have helped us to understand, where the players are and what the processes are in this world. But then also part of it's by design that, we're a company of 11 people that places over 1,000 policies. We're looking for a specific type of client. And what we want is a specialized product, because when you're talking about the world of commercial insurance, insurance brokers are everywhere. They're on every corner. But the ones that focus in specialty lines, and then particularly when you really narrow it down to public company D&O, which is very specific, there's almost none. So we want a market that is, inch wide, mile deep, so that we can make an impact on the policies that we're brokering, if that makes sense.
It does make sense. Yeah. And I'm just curious, because when you talk about the expense of these policies and the market conditions that we're in right now, I'm just curious, like, what is like a small cap company, NASDAQ IPO is there a range? And maybe there isn't, and I know everybody's unique, but is there a range like, hey, a regular small cap IPO is going to take $5 million of coverage, $25 million. Like what's the range that people need or look for, or should they be looking for?
So that's a big question, but I can give some bumpers on it.
Okay.
And it's also important to realize that in the particularly the small and micro cap space, it's hard to find data. And generally speaking, if you go to us or any other insurance broker on the planet that specializes in this, you're going to get a couple of answers to that question. The first one, and the easiest one, is, okay, well, let's look at your peer data. Let's look at other companies that are in the same market cap bandwidth and decide how much insurance do they buy. Great, that's how much you should buy. To be clear, that is, everybody else is jumping off the bridge at this point. Do you want to jump off the bridge at the same point? There's not a lot to it. There are other models out there that take into account what is your public float, what is the average stock drop that has caused a securities class action claim in the last 10 years, what was the average settlement. It's hard to find defense costs because, when you have a claim, it's not only the indemnification of the claim, but it's how much did you pay the lawyers to make it go away, and that's significant. But again, when we're talking small and micro cap here specifically, all of that data is for $1 billion plus companies. So it's hard to extrapolate it downward. And anybody that's in this space regularly, which there's not many of us, could tell you the claims don't come out of small and micro cap companies when you're looking at the cross section of the entire market. So when we're talking about pricing, we're talking about our value add to the buyer, we'd like to take some credit for how much rates have come down over the last couple of years. Now, granted, there's macro, what's the word I'm looking for? There's macroeconomics at play that are driving the prices down.
That makes
and
sense,
namely, the capital markets have dried up and there's less new business out there for underwriters. But we'd like to take a small amount of credit for going to these underwriters and screaming, from the rooftops that, hey guys, you're overcharging on the lower end of the spectrum because you're using large and billion-dollar plus companies as your data points to set your rates. And you can see it in some reports that are out there where small and micro cap companies actually over the last 5 to 6 years have paid more on a price per million for their insurance than companies that are 5 times bigger than them. And that doesn't make any sense.
Wow.
Therefore, therein lies, we've talked about the problem, therein lies the opportunity. And that's what we're doing every single day.
And let me ask you, you had mentioned that you guys are a team of 11, taking a step back for a minute. I think when you and I were introduced a couple of years ago by our mutual med tech, biotech CEO friend, I think it was just like 3 of you or 4 of you. And I think that gives inspiration for anybody that's listening that is on the small business side that is looking to get into a category. Now you're going head to head with the big boys. And, frankly, I remember what that's like when we started, Vintage. We went against Donnelly and Merrill. When we started V-Stock, we went against the 2 or 3, behemoths in the room. We still do. What was your mindset in terms of the courage to say, it doesn't matter, it's not going to dissuade me, I'm going to grow my business? And what advice or tips might you have for somebody else that has a small company and everybody's saying, nah, don't bother, you're going to be the small fish and you're not going to have the bandwidth or the capability to compete against the big boys, but you did it anyway, and you're knocking it out of the park. What are some advice or some tips you might have for somebody that's in those shoes?
Well, first of all, we're still hitting singles over the second baseman. We're working on knocking it out of the park. But
okay.
So I don't know if this is good advice or not, but it's certainly what I've lived by since starting this company in 2015. Part of it, I always say, was just being a little bit younger and a little bit dumber. And looking back now, I think, boy, that was hard. But at the time, you're in the moment and it doesn't really feel that way. But the advice that I've always lived by is, if you're okay with the worst case scenario, then you have nothing to worry about. And so over the years, the worst case scenario has morphed and it's been a different worst case scenario, but I've always been able to, I've got some really awesome people that are in my life, not only as mentors, but as team members, as friends, to help me flush out, okay, what is the worst case scenario? And if I'm okay with that, let's give it a rip. And knock on wood, the worst case scenario hasn't been the scenario.
That's great. That's a great line. I think I'm going to trademark that one. As I mentioned before, you have a very unique perspective when dealing with the public markets. Can you give, I don't want to put you on the spot, but can you give a scenario or a case study where Assurtrak has helped a company or a CEO or a board navigate either a particular problem or a complex scenario, or where they may have had a claim? If you could discuss, like, any case studies that'd be like fascinating for us to hear about as somebody that's on the inside of this world.
Well, so I think what so many people don't realize, and it's an easier question than you might think, because the case study happens over and over again, of people believe that the insurance market is as simple as, well, I sent it to an insurance guy, they got me a quote, or insurance guy or insurance gal, whatever, got a quote, and well, that's the quote. So what are you going to do? It's different.
Right.
That is so far from the truth that it's not even funny. When you think about going out to a market that's very large, it's very efficient, and it's also very well defined. And what I mean by that is, particularly with public company D&O, it's defined in the carriers that are in, and they are accessible. And it's not like a lot of other insurance products out there, think home or auto insurance. You can go get a quote from a State Farm agent, you can go get a quote from a Geico agent, but you can't go to an independent agent and get those same quotes. You've got to kind of work all the angles. In public company D&O, that's not the case. the market is defined, and when you come to a broker, you should be able to get access to the entire market. But taking that and then layering on top how specialized this market is, the average insurance broker doesn't have a clue what the parameters of that market are. We do. It's what we do all day, every day, for better or for worse. So the case study that happens over and over again is somebody sends us a policy and says, yeah, well, look, my broker has shopped this, and they said this was the best option. And we look at it and say, okay, well, it's not the best option by hundreds of thousands of dollars. And then the next question is, how?
Right.
Why? How are you doing that? And the answer really is as simple as our own market knowledge, because we're in this all day, every day. And the way that I illustrate this to people, and I don't know how effective it is, but if you go to insurance broker A and they send your submission, they're going to go get quotes for you. They send your submission to 50 different carriers, and they say, okay, I'm looking for a quote for $400,000 for this company. They're going to do an IPO, whatever it is. Well, of those 50 carriers, they're going to come back and say, 46 of them are going to say, yeah, that sounds great. I'll do this for $400,000. It's great. You send us the same submission. We're going to send it to the same 50 carriers. And because of our market knowledge, we know the last one we did, it was actually 120,000, not 400. So we send the target at 120. I'm going to get 46 no's, because 46 carriers are going to say, nah, I'm not interested in 120. But the good news is I only need one. One says yes. I've now beat my competitor by $380,000 or $280,000.
That is probably music to any CEO or CFO's ear when they hear those drastic cost savings. You know, that line of, you know, I only need one to say yes. That's true on the insurance side, and it's probably true on the business development side as well, right? Like, you're speaking to CEO after CEO after CEO, and let's face it, in this industry, everybody's got a brother-in-law who's got a brother-in-law who's got a nephew, right, who's got, you know, a board member who insists on using his guy, and this, everybody's got a guy, right? You're my guy, but everybody's got a guy. And
right.
you know, for the people that are either looking to develop their business, or for CEOs that are looking to raise capital, I mean, it's all the same skill set in developing those relationships. How have you, over the last couple of years, sort of grown, find the right targets? I know you guys do a lot of conferences, because you and I have met at that 6 a.m. gym prior to the events of the day. What do you find to be most effective to introduce John Farris and Assurtrak to, you know, Mr. CEO? Is there anything that works better than others?
So you've said it, and we've invested really heavily in, I'll call it, the conference circuit. And there's a great group of service providers that are out there, like you and others, and the bankers and the auditors, and everybody that's there that's looking for the same set of clients. And there's kind of a community feel there of, okay, trading referrals, but then also the good old fashioned just cold outreaches. And the more you do it, the better your story becomes, and the better your case studies, as you said, become. So the other thing I say is we're so small in the scheme of things that everything's a target. We don't have a shortage of prospects. They're everywhere. And the more you do a good job for people, the more that naturally grows.
And there's no difference for you. Obviously, you have to understand it, but there's no difference for you whether you're insuring a biotech, medtech, I mean, maybe crypto might be different, but otherwise, it's the same process for you and your team.
Yeah, in fact, I would even argue that there's a lot of people out there that have made the decision to go with an insurance broker for what they do as an underlying business, and that can be a big hindrance. And I'll use crypto as a great example. We have several crypto clients, and a lot of those companies in particular want to know, how many crypto companies do you work with? And what we always tell them is, I understand why you're asking the question, but let me tell you why it doesn't matter. And it doesn't matter because we're talking about public company D&O. not insuring your mining machines. Now,
Right.
if you want to talk about insuring your mining machines, fine, but that's a separate conversation. The dynamics that are at play in the public company D&O market are completely different, and that's what we're experts in.
That's a great point. Yeah.
For so many people, a lot of the companies we're working with, the D&O is their biggest line item from insurance, but it's not necessarily the most important. They've got other professional and cyber exposures that somebody hasn't told them, hey, you need to look at these. And that's something else that we take a ton of pride in, is being able to be the quarterback of your entire insurance program, even if we're not the answer. And what I mean by that is, if you have, several $1 million in mining machines, going with the crypto example, I'm not the property guy, but I know them, and I know the distribution model of this market, and I know how to make sure that you're getting the right deal. I can connect you to the right people. And that also goes back to, you were talking about, everybody's got a guy. That's something else that we do a lot of, is come in as an expert that works alongside a current broker. And the analogy that I use a lot of times is, you may have the best general practitioner doctor on the planet, but if you've got a brain tumor, you need to go see a brain surgeon. So just because you come see the brain surgeon doesn't mean you can't go see your regular doctor anymore, if that makes sense.
Great analogy. And so, as we start to wrap up, one question that I would pose to you is, when dealing with an IPO or a SPAC or public company, I know that we suggest, for all the variety of services that I offer, we try to get in, I don't know, maybe 6 months prior to the actual listing, whether it's the S1 filing, whether it's, LinkedIn connections and marketing, whether it's, helping them get DTC eligibility. That's typically what we look to come in as a provider of sorts. You said you're the quarterback. When does the game start for you? Meaning, do you want to be in when they're still private? Do you say, hey, come back to me 2 weeks before you're ready to list? What's the point of entry for you?
So I think, generally speaking, for anybody that is running a business and particularly has aspirations of being a public company, it's never too soon to start the education. And that's something else we didn't really talk about, is that there's an epidemic, if that's the right word, of executives out there that are buying D&O that have far too little knowledge about what they're buying. And then couple that with, it costs 10 times more than they expected it when they finally become public. It's a bad recipe. So the sooner the better, just to start an education. And the number of calls that we've done as a team with teams that are looking to go public, just to educate them on the process, is countless. And that doesn't always pan out to business for us. Maybe we're too good of a teacher sometimes, but those are calls that we enjoy, and they can be super beneficial in somebody's journey.
Yeah, I mean, I definitely have experienced the same thing, where you try to give out as much information as you can and be as helpful as you can. It's just good karma, and I know you've done a great job at that. Sometimes it doesn't always come back to you, but you gotta keep giving it out there. I would ask you what your goals are for Assurtrak. I hesitate to ask that question because, if somebody would ask me that question, I'm not from that school of thought where, nothing against the Harvard MBAs and all that, where they budget and they project. And in my mind, my goal is, I come in every day, I work my tail off, and I try to, be as productive and as profitable as possible, and deliver as much value for my clients. That's my projection plan. What are your goals for Assurtrak over the next 5-10 years?
That's to me, that question almost feels as personal as, like, hey, pull up your bank account. Let me see how much money you got.
I wasn't asking for dollar signs.
No, I know, but it's funny, and I don't know how many people share this sentiment, but my shoot for the stars goal is, I want to keep doing what we're doing and to be recognized as the best in the business when it comes to specialty lines, public company insurance. That's a big goal just based on who the players are in this space on the larger side, but that's the goal. But people ask me that question a lot too, and kind of similar to your answer, over the last 9, getting close to 10 years, starting out just myself, it was a lonely feeling for a long time. And I always use the expression, no matter how low the top is, it's lonely at the top. And over the last really 3 or 4 years, as we've grown, I think what I'm the most proud of is, and this may sound cliche, but the family that we've built. And we've got our team here hangs out, outside of work and babysits for each other's kids. And we go to lunch every day. And as long as that's happening, I'm happy.
That's great. That's great. And I should mention you're doing it out of North Carolina. So that's also an accomplishment. That's a pretty good tagline. We offer insurance and babysitting. I think that's
That's
going to
right.
sell really well. Well, John, I want to thank you for your time. I'd like you to come back maybe in a year and give us an update. Who knows? Maybe one day you're gonna roll out, you're gonna list on the NASDAQ with the ticker symbol ASTK, and you'll go public yourself once you've made it big. So we're looking forward to seeing that.
Well, Seth, you know how much you mean to me. Thanks for having me.
I appreciate it. Good to talk to you. Bye bye.